Have you ever wondered what would happen to your hard-earned money if the dollar suddenly lost its value? It's a scary thought, but it's not entirely far-fetched. With economic uncertainty on the rise, it's crucial to diversify your investments and protect your wealth. And that's where assets that will make you money when the dollar collapses come in. Now, I know what you're thinking. Investing in doomsday scenarios sounds crazy, but hear me out. These assets are not just for conspiracy theorists or preppers hoarding canned food. In fact, many of them have been proven to hold their value in times of economic turmoil and even generate significant returns. So whether you're a seasoned investor or just starting, let's explore some of these assets that could be your lifesaver when the dollar inevitably loses its footing. So first on the list we have commodities. Picture this, you're standing in a bustling international market surrounded by vendors selling everything from spices to precious metals. The catch? Every single item is priced in US dollars. Now imagine that the value of the dollar starts to weaken. Suddenly those prices start to climb higher and higher. That's the beauty, or the beast, depending on how you look at it, of commodities trading. Historically, when the dollar is weak, commodity prices tend to rise. But here's the kicker, that relationship isn't always set in stone. Sometimes commodity prices and the dollar rise together, creating a bit of a roller coaster ride for investors. Take the 1980s and 2000s for example. High inflation led to interest rate tightening, which then caused goods costs to spike, triggering US recessions. But don't let that scare you off. If you're looking to hop on the commodities bandwagon in 2023, there are plenty of options available. Consider checking out exchange-traded funds, like the Invesco Optimum Yield Diversified Commodity Strategy, No K1 ETF, or PDBC. It's a great way to dip your toes into the world of commodities without having to navigate the market on your own. Get ready to embrace the thrill of the trading floor and potentially reap the rewards of a booming commodities market. With that, let's look into number 2, which is none other than precious metals. The classics, gold and silver, the OGs of precious metals. People have been hoarding these shiny beauties for centuries, and for good reason. When things get dicey in the political or economic world, gold and silver are like the superheroes of the investment world, swooping in to save the day and protect your hard-earned money from economic collapse. They can't be printed like paper money, so they're a safe bet when it comes to preserving value over time. But let's not forget about silver, the trusty sidekick to gold. It's like Robin to Batman, the Samwise Gamgee to Frodo. While gold is often associated with geopolitical risks and inflation, silver is more in tune with economic trends thanks to its uses in industries like electronics and photography. Now, investing in gold and silver isn't for everyone. It's kind of like the investment equivalent of skydiving, exhilarating for some, terrifying for others. Plus, they don't yield any income, so when interest rates rise, they may underperform compared to other financial assets. But fear not, there are still ways to invest in these precious metals without having to bury them in your backyard. Enter the Gold IRA, a specialized individual retirement account that lets you invest in gold both physically and non-physically. You can have a physical asset in your Gold IRA, like bullion or gold coins, but also precious metals-related securities within the investment portfolio. Plus, it's a lot safer than hiding gold bars under your mattress, and probably more legal too. But wait, there's more: platinum, palladium, and rhodium. The triple threat of lesser-known precious metals. Platinum is like the white gold of the group, rarer than gold and often used in jewelry. Palladium is similar to platinum and tends to follow the same trends as its more well-known cousin. And rhodium, the mysterious outlier that's often used in catalytic converters, may not be as popular among investors, but hey, it's always good to have options. For number 3, we have something other than the old classic ways: emerging markets. Are you ready to spice up your investment portfolio with a dash of adventure? Look no further than emerging markets. These are countries with rapidly growing economies, such as China, India, and Brazil. And guess what? A weaker dollar actually works in your favor when investing in these exciting opportunities. When you invest in a foreign fund, your money gets converted back to dollars when you cash out. If the dollar has risen in value compared to the foreign currency, you lose out on some of the investment's value. But with a weaker dollar, your investment actually grows in value when converted back to dollars. So why not give the Vanguard FTSE Emerging Markets ETF or VWO a try? It's an easy and cost-effective way to add a little international flair to your investment mix. Let's move on to the next one: cryptocurrencies. Bitcoin and other cryptocurrencies are like the rebel teenagers of the financial world. They don't follow the rules set by banks or financial institutions, which is exactly why some investors find them exciting. Plus, when the economy is in shambles, these digital currencies can be a beacon of hope for some investors. However, the relationship between cryptocurrencies and the US dollar is complicated. Some investors believe that if the dollar loses value, cryptocurrencies will be the knight in shining armor that saves their portfolio. Others think the opposite. It's like trying to predict the behavior of a rebellious teenager. Almost impossible. Legendary investor Warren Buffett once said that cryptocurrencies are like a roller coaster ride with unpredictable ups and downs. So if you do decide to invest in them, be prepared for a wild ride, and don't bet more than you can afford to lose. Next, we have on the list physical storage. Stocking up on food and water may seem like a fun prepper activity, but it can actually be a smart move during times of economic uncertainty. It's like building a fortress for your pantry. By having a stash of non-perishable goods and clean water, you'll have a better chance of weathering any financial storms that may come your way. However, it's important to remember that food and water storage shouldn't be your only plan. It's like having a helmet for your bike ride but not wearing any other protective gear. You'll still need other financial assets to protect yourself from any potential economic crashes. So don't rely on your canned beans and water jugs alone, but consider diversifying your investments and having a well-rounded financial plan. Well, the next asset on the list is quite an important one, and that is foreign currencies. In times of economic uncertainty, diversifying your portfolio with foreign currency can be a smart move to protect your finances from the potential collapse of the US dollar. Some wise market experts also suggest that owning foreign currency could be a smart move. That's right, folks, we're talking about those fancy currencies from far-off lands like the Chinese yuan, Japanese yen, European euro, and Norwegian krone. Why put your trust in foreign currencies, you ask? Well, for starters, fiat currencies have a tendency to collapse under their own weight. And if the dollar ever falls, owning foreign currency might just be the lifeline you need to stay afloat. I know what you're thinking, but wait, won't investing in foreign currency be risky? And you're not wrong. There are no guarantees that any particular currency will weather the storm of a dollar collapse. But hey, if you're feeling adventurous and want to add some international flair to your portfolio, it might just be worth the risk. And lastly, mutual funds and foreign stocks. If you're ready to spice up your investment portfolio, why not consider investing in foreign stocks and mutual funds? Not only can they potentially earn you some sweet appreciation, but they can also provide a cushion when the value of the dollar goes down. And who doesn't love options? There are various ways to invest in foreign stocks, such as investing in large American corporations with international sales, closed-end funds, direct purchases of foreign stocks, or American depository receipts or ADRs. The possibilities are endless. Whether you're into developed markets, emerging markets, growth stocks, value stocks, or dividend-paying stocks, there's something for everyone. Plus, with ADRs, American investors can get a slice of the foreign stock pie without having to navigate international business waters. But here's the kicker. Even though ADRs trade in US dollars, their value can still fluctuate based on the stock's native currency. So if the dollar takes a dip, investors can still come out on top with an increase in ADR share prices. In conclusion, while there is no foolproof way to protect your finances from a potential collapse of the US dollar, there are various assets that could help you make money and minimize the damage caused by a weakened dollar. From diversifying your portfolio with gold to investing in foreign stocks and mutual funds, to having physical storage of water and food, to owning foreign currencies, these options all come with risks. But they're still better than having a collapsed dollar. It's important to remember to do your research and seek advice from financial experts before making any investment decisions. With careful planning and preparation, you can increase your chances of weathering any economic uncertainty that may arise. So what do you think? Which one of the above strategies had the least risk, and are you planning to invest anytime soon? Let us know in the comments, and don't forget to like and subscribe. Thank you for watching.